This is a quick lender update. Number one, if you did not know, I am presenting to the TMC Young Professionals Group tomorrow, October 17th. I will include the registration link in this video description, as well as in the email. If you have not registered, you're interested in hearing me talk. We are talking about how to engage our lenders and vendors to prepare for the next generation buyer. There's going to be a lot of interesting discussion topics. We are also going to name drop some resources, freed and paid, to help better prepare our organization to work with the next generation multi-channel communication borrower, which means they may like to text, they may like to chat. Also, how do we avoid the pitfall of apply now versus a call? Because younger generation borrowers tend to be hesitant to go to apply now before they build trust, but at the same time, they're not going to be setting up a call up front, and sales cycles are just going to take longer. So what can we do as lenders to help prepare for this next generation borrower? That's what it's going to be about. I'm speaking to young professionals specifically, but the group is pretty open. I'm sure TMC would love to have you. I will include the registration link below and in this email. If you do not see this until after the webinar, please ask us for a recorded webinar because we would love for you to see it. We also have a published piece to include with this webinar. So if you just want to review that, let me know as well. Okay, that's number one. Number two, what I wanted to come to this video about, I'm doing a drum roll, is the very good news that if your borrowers are in forbearance or deferment, they do not need to be anymore. The Department of Ed announced and released that those who are in forbearance or deferment can get out of them. All we need to do is enroll them in a plan that is not saved. They can enroll into a different income-driven plan. We're doing that all day long. If your borrower needs to get out of $0 payments because they cannot get an FHA loan, we can help with that all day long. If your borrower went to a for-profit school, that they should consider getting their student loans discharged because they went to for-profit schools, we can help with that. Whatever issues or questions, we can help. If they have high variable interest rate private student loans, we have an amazing refinance partner now that has some of the lowest, most competitive rates in the market. We also have a special partnership set up with them. So if you want to run your data, identify these borrowers, let us know ASAP. We're announcing our official partnership with our refinance partner coming up in a couple weeks. But if you're interested in getting a preview on what that partnership looks like in terms of reducing data fees and helping you identify more deals you can close, do not hesitate to contact us. Contact us, ask us questions. We would love to help any lender that is stuck with not having questions around how to manage student loans in deferment. How do you deal with a $0 payment and they can't qualify with 1% or 0.5%? How do you deal with those scenarios? We are here on standby to answer those questions. Please. By the way, I just want to put one more plug for my mortgage collaborative talk, because I'm actually not just giving the talk to the Young Professionals Group, hopefully down the line in some other formats as well. So if you miss it, but I want to give a plug for it because LoanSense, we worked really hard to move our pull-through rates when we first launched as a company from under 10% to 3 times, 4 times that pull-through rate. So we worked really hard on how to most effectively work with borrowers to help them increase their likelihood of filling in information into our application, to engaging with us and getting all the required paperwork submitted to get their student loan payments adjusted down. Okay, so we worked really hard. So we have some expertise to share with lenders on what we can do to better engage, better build trust with borrowers on the webinar to come. And please let us know how we can be of assistance.